Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Big move for a company like Cisco. Shares up 4% after its earnings came out just a few moments ago. Joining me now for more, Daniel Ives is here. He's Chief Strategy Officer and Head of Tech Research at GBH Insights. And Eric Supiger is JMP Securities Managing Director and Senior Research Analyst. Welcome to both of you.
Good to be here.
Dan, what's the headline, do you think, from this quarter for Cisco?
I mean, I view it as a step in the right direction. I mean, they definitely have clear headwinds in terms of big ticket items on switching and networking. But you've seen a transition there, more of a subscription model, software approach. I mean, Rome's not built in a day. I mean,
Even
this
for
is
a fundamentally hardware company?
Yeah, I mean, look, but they're starting to make that shift to a more software-centric model. That's been their playbook. And from an investor perspective, you didn't need a lot here to sort of get the bull case sort of going. And I think this is one, given the cash flow, given where they're positioned, I think it's one where that sort of transformation that's starting to happen, I think investors have something to hang their hat on here.
Eric, do you agree?
It's certainly encouraging. The reality is this is a company that's been in transition for a good couple years under the management of Chuck Robbins. And we've had some mixed results. So I think they've made some management changes. I think this is certainly a good sign that maybe things are solidifying and maybe they can start moving forward and accelerating some of the growth, which has been lacking for a little while here.
Yeah, I mean, Dan, it's obviously been kind of stuck in this relatively slow organic growth mode. Do you think there's anything Cisco needs to do to more aggressively either change the portfolio, be a more aggressive acquirer? I know they've done some of that.
Yeah, I mean, you saw BroadSoft from an acquisition. But I do think organically is going to move the needle, but ultimately it probably is acquisitions. I mean, I'd expect them to make more significant acquisitions, specifically in security, in cloud. If you look at the transformation, you look at what Nadella's done at Microsoft, you know, what Hurd's doing at Oracle. I mean, right now, there's a window of opportunity for them to turn this around and make sure that they're not left behind on the cloud shift. That's going to be organic and acquisitions. But you look at these results, it's a step in the right direction, but it shows that the underlying factors there in cloud are starting to shift positive.
Eric, how much of a software company can Cisco ultimately be?
So they would like to get it to 50-ish% between software and services. Right now, specific to kind of the growth elements, which is the software components, it's only about 15% of revenues, which is their application software and their security software. So they can ramp that up in a meaningful way, and that would be critical for margins as well as for growth.
Yeah, they have a host of other issues to deal with. I'm sure we'll hear more about that on the call. We're going to hear from the CEO. Guys, thank you. Dan Ives, Eric Supiger. With the shares of nearly 4%, Cisco CEO Chuck Robbins will join the Squawk on the Street crew Friday at 9 a.m. on Squawk on the Street. L Brand's earnings are out. Let's get over to Seema Modi, who has that report. Seema?
Hi, Kelly. L Brand shares moving lower here after reporting an earnings that came in flat or in line with expectations. 30 cents adjusted revenue, higher than what the street was expecting at $2.62 billion. Although in the press release, the company says for the third quarter, the exit of the swim and apparel categories had a negative impact of about 2 percentage points to both the total company and Victoria's Secret comp sales. L Brand shares down now more than 5%. Let's switch over to the upscale furniture seller Restoration Hardware, which really has been focused on streamlining its inventory operations this year. The company raising its guidance, its Q3 guidance. You can see the stock is up more than 12%, building off of what is already a stock up about 170% here in 2017, a big winner. Lastly, in the tech space, NetApp reporting better than expected earnings, 81 cents adjusted. Strong beat. The analyst consensus was for 69 cents. Revenue at $1.42 billion. That, too, came in higher than what was expected. Guidance also strong, and that stock up nearly 7%. Kelly?
Thank you very much.
About 170% here in 2017, a big winner. Lastly, in the tech space, NetApp reporting better than expected earnings, 81 cents adjusted. Strong beat. The analyst consensus was for 69 cents. Revenue at $1.42 billion. That, too, came in higher than what was expected. Guidance also strong, and that stock up nearly 7%. Kelly?
Thank you very much, Seema. Mike, some big movers there, especially RH.
Yeah, Restoration Hardware is a fascinating story. Still have a huge contingent of short sellers who think that basically the strategy's a mess, but they did this enormous leverage buyback. So it's essentially a direct tug of war between the CEO and the shorts, and you see they actually had good enough results for another pop today.
And I think RH was one of Bill Miller's investments, which just adds to
I believe that's right.
year.
Oh yeah, he's more than willing to stand in front of the assembled short sellers on a risky stock with an aggressive balance sheet and say, I see something there.
Yeah,
so.
We'll keep an eye on that one. Also,
and L Brands, I mean, stock had been up from like 39 to 47 since August, so it had this move. I think it's going to be about the outlook, obviously, for the next 3 months.
Its 52-week range, it was up at 75.
Oh yeah, it's had this kind of stair step down.
Yeah, all over the place. Those shares, as you mentioned, down more than 5% right now after their report. Time now for a CNBC News update. Let's get over to Sue Herrera. Sue?
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. Investigators have found another victim from the deadly shooting spree in Northern California, the gunman's wife. Her body was hidden in the home. They believe she was the first victim of the shooter. You see his picture there. He's been identified as Kevin Neal.
He had literally cut a hole in his floor. We're confident that he murdered her, shot her at some point, probably late Monday, and literally just put her body in the floor and covered it up.
A massive pileup on a highway in China, killing at least 18 people. Another 20 people were injured. Officials say more than 30 cars were involved. It began when a car crashed into a bus and hit the oil tank on the bus, which sparked a huge explosion. And for the first time ever, scientists have tried gene editing inside the body to cure a disease. The experiment was done earlier this week in California on a 44-year-old man with a rare metabolic disease. The patient received billions of copies of a corrective gene intravenously to permanently alter his DNA. Signs of it working could come in about a month. So we're going to keep track of that story, and we wish him all the best of luck. That is the CNBC News Update. Kelly, I'll send it back downtown to you.
I was going to wish you a happy birthday, but after that news update, I'm not feeling so happy. So,
thanks, Kelly. I appreciate it. I know there was a kind of grim news today, unfortunately.
So anyway, you have a happy birthday.
Thank you so much. I appreciate it.
As always. Sue Herrera. Let's take a look at how we finished the day on Wall Street. It was red across the board. Dow down 138, S&P down about 14, the Nasdaq down 31, the Russell down 7. Everyone was down about 0.5% today. One of the deeper sell-offs we've seen in this kind of trip that the markets have been on for several sessions now. Let's get to some of the other big stories of the day in our rapid recap.
The purpose of this is to cut taxes for everybody. And so we want to keep doing that. And we know that this SALT fix is really necessary to make sure that that's the case. So yes, that is one of the bottom lines for the House.
The DOJ staff has been approaching state attorneys general. This is fairly typical. In this case, what we're hearing at least is that while approaching a number of state AGs, perhaps as many as 19 or 20 of them, they've gotten very few of them at this point to sign on to the complaint.
Stores still matter. They're still going to generate the majority of retail sales for years to come. Our new brands have been incredibly well received. It was just a couple of days ago that we introduced Hearth and Hand, our collaboration with Chip and Joe. And the reaction across the country has been amazing. It's driving traffic to our stores, visits to our site.
The head of the CFPB, Richard Cordray, basically has sent out an email saying it is his intention to resign as head of that office by the end of the month.
I think other global markets are more appropriately and fundamentally valued. I think the U.S. is ahead of the pack, so to speak. And again, not that things are going to go down precipitously, but I think we're basically at a peak.
And then just before the market closed, Mike, word that Senator Ron Johnson will oppose the Senate tax bill. Do you think that's why we're down 138 here?
I don't really. I mean, we were down 160 on the Dow both today and yesterday in the morning, and you kind of clawed your way back. I think it's been a global kind of risk-off move. I keep pointing out Japan's down 6% from the highs. Europe's down 4.5% from the recent highs in the last couple of weeks. Ron Johnson of Ohio has nothing to do with that.
Well, when you put it that way, it's a fair point. All right, time now for the takeaway. Today, it's a streaming version of it, and we begin with Amazon dropping its plans to create a skinny TV bundle, according to Reuters. Amazon said they couldn't get enough profit or networks to sign on. They even concluded that, quote, it's not necessarily the direction the TV business will eventually go. Now that's especially interesting, given that a skinny bundle, I think, is it Philo or Philo, launched today with non-sports entertainment offerings from Scripps, Discovery, and others. So who's got this model right?
I was going Philo. I think you and I can just decide what it's going to be called right here. I don't know that either one has it right or wrong, but it just shows you that everyone's kind of experimenting with what the right mix is going to be and the right pricing. I mean, Amazon, by saying, look, we're not really clear that a new bundle is the way it's going to go, there's plausibility in that because maybe people can just do it a la carte, right? You can kind of shop on Amazon's platform.
The way they offer movies now. You just pick the one you want. It's $1 a piece.
On the other hand, this Philo, if that's what it is, people criticized it for being priced too aggressively. $16 for a lot of non-sports bundle. That's not the net cost of those channels. So in other words, if you just passed along what the cost of those networks is, it would probably be under 10.
Wow.
So they're trying to build in some profit as opposed to do it cheap and build scale.
We'll see if they're forced to go the other way. Next, here's what Amazon does like, a Sports Illustrated TV channel, apparently. Time is launching the service for $4.99 a month through Amazon channels. It's aimed at sports lovers and will offer studio shows, movies, and documentaries. Is this an ESPN killer?
No, but I do think it's a relatively, shrewd, I think also low risk way to kind of ape what ESPN has, and not just ESPN. I mean, remember Barstool Sports was getting in bed with ESPN. Now they're doing their own kind of streaming network or online network. And I think it's an extension of the fact that every publishing site has become video. I mean, video is where all the ads are because that's where the ad demand is. Yeah. So it does make sense. Obviously, it's not going to be kind of, live sports, but it makes sense. I do think the SI brand still has some value. They can tell some stories.
We'll wait to see if there's any swimsuit.
You would imagine they might make use of that in the slow months of the winter.
Finally, Hulu is being offered for free to Sprint Unlimited Freedom customers. It's going to have limited commercials. Hulu will also reportedly get a cut of Sprint subscriber revenue per month. Couple things. T-Mobile already did this with Netflix. Can Sprint's network handle all this extra streaming now? And what's your takeaway from them doing this partnership?
No idea if the network can handle it. There's a lot of criticism how much more investment there has to be in the network. They can obviously kind of modulate the quality and the volume that runs through there. It's another reminder that what these wireless companies are, whether it's AT&T, Verizon, Sprint, or T-Mobile, they're just data clearinghouses, and all they need is to find new ways to maximize the data load on those networks so that they can sell it to you. Even if it's unlimited, there's always caps. So it makes a lot of sense, but I think it shows you that that's kind of just the table stakes now. You have to have something content-oriented.
And if you're going to offer it, why not own it? I mean, not
at some
specifically
point,
in that
perhaps,
case, you can understand if that's the AT&T.
I don't think Hulu's for sale right now, at least not to an outsider.
But all of a sudden, if you could pick up a sports, if you throw some kind of content out there.
And you see the Verizon approach, right? Kind of cobble some stuff together.
Exactly.
Yahoo.
Anyway, a lot of changes underway across that whole sector.